What if I told you the United States has already figured out how to shrink its debt? They did it without printing, they did it without raising taxes, and they did not cut spending. And they've done it before. In 1934, the government pulled off a financial maneuver using gold that quietly reshaped the balance sheet. It created room to breathe during a national crisis. Now, a century later, the same playbook is coming back to life. This time, the asset is Bitcoin. This is not a theory about speculation. This is about a potential monetary strategy. In 1934, the government quietly changed the value of what it held. Today, it could do the same by gradually accumulating Bitcoin. As adoption grows and the price moves higher, that value can be locked into the balance sheet. Nothing else would need to happen. In 1934, Executive Order 6102 required Americans to turn in their gold. The government then revalued the gold from $20.67 to $35 per ounce. This instantly raised the paper value of the Treasury's gold holdings. The Federal Reserve no longer held the gold itself. Instead, it received non-redeemable gold certificates worth over 11,000 million. Those certificates became the foundation of Federal Reserve's balance sheet. In 1971, President Nixon ended the convertibility of dollars into gold. From that moment on, gold's role was reduced to a symbolic listing on the books at a fixed price of $42 per ounce. The Federal Reserve could now expand its balance sheet without needing to hold on to gold. In 1970, the Fed's gold was still listed at the value of $10,400 million. Its total assets at the time were just over $81,000 million. The accounting price of gold stayed frozen. In 2025, gold is still listed at around $11,000 million, but the Fed's total assets have surged over $3.4 trillion. Gold has not vanished, its share has simply been overtaken by the scale of other assets. In 1970s, gold represented nearly 13% of the balance sheet. Today, it represents less than 1%. This is not because gold disappeared. It's because the rest of the balance sheet became significantly larger while gold's accounting value stayed the same. The official number never changed, but after the financial crisis of 2008 and the response to COVID, the Fed's balance sheet expanded by trillions. This made gold seem insignificant on paper, even though its real market value increased dramatically. If gold were updated to reflect its true market value, the Federal Reserve would show over $860 billion in unrealized gains. That value could be used to accumulate Bitcoin. No borrowing would be needed. No money would need to be printed. This is why I'm showing you this slide. It helps explain how the government could scale its Bitcoin position without adding to the deficit. Now consider Bitcoin. As of 2025, the United States holds about 200,000 Bitcoin. Most of these came from government recovery actions such as Silk Road and Bitfinex. These coins were later auctioned for a fraction of their value, but under the new crypto-focused administration, that has changed. A strategic Bitcoin reserve has been created by the executive order. It is not meant for speculation, it is meant for monetary structure. This is very similar to what happened in 1934. Back then, gold was revalued. Today, Bitcoin could be repriced by the market. Instead of gold certificates, digital equivalents could serve as monetary anchors. These would reflect a new class of value on the Fed's balance sheet. President Roosevelt did not eliminate the debt, he increased the value of what backed it. The same approach could work today. Bitcoin's rising price could be used as protection against the burden of debt. This method does not require repayment, it creates strength through repricing. There is no need to time the market. The government only needs to accumulate gradually. As the market moves higher, the balance sheet adjusts naturally. This is how the repricing curve works. The United States already owns 200,000 Bitcoin. The strategy could be to add 20 to 30,000 more each year. This would continue for 5 years. The key is to remain under 2% of the total supply. This keeps the accumulation stealthy and avoids creating market shocks. Bitcoin behaves reflexively. When the price increases, more people believe in it. That belief leads to more demand, which increases the price again. If the Federal Reserve becomes a steady buyer, it sends a very strong signal. Others would follow. Reflexivity means the observer influences the outcome. In financial markets, expectations can shape reality. Bitcoin reflects that behavior more than any other asset. At $108,000 per coin, the current stash is worth $21.6 billion. If the price rises to $1 million per coin, that same reserve becomes worth $200 billion. No new legislation is needed, no tax increase is required, only the passage of time and the market's repricing power. In phase 2, the Fed could continue accumulating. Here, it would purchase 25,000 Bitcoin. It would focus on buying during strong market phases, for example at $150,000, $200,000, or $300,000 per coin. This creates upward momentum. Over 5 years, this strategy would cost about $32.5 billion. If Bitcoin reaches 500,000 per coin, the reserve becomes worth $162.5 billion. This offsets part of the national debt without adding to the money supply. The first 200,000 coins were acquired at no cost. That means every dollar of gain is pure margin. As the Fed continues to buy, the rising price creates additional value. This builds a strong, silent layer of financial protection. In 1934, the government didn't create new money, it changed the value of something it already held. That action strengthened the balance sheet instantly. In 2025, the United States could follow the same logic with Bitcoin. It does not need to adopt it as a currency, it only needs to hold it and let the market do the rest. If Bitcoin reaches 500,000 per coin and the Fed holds 325,000 coins, the reserve would be worth around $162.5 billion. That offsets a small portion of the national debt. It also sends a clear message about monetary strength. That $162.5 billion came from an initial cost of only $32.5 billion. It did not require inflation. It can be used for collateral, for crisis response, or for long-term credibility. To offset 10% of the national debt, the Fed would need several million Bitcoin. That is not realistic without destabilizing the market. The smarter move is to accumulate a reasonable amount slowly and let the price do the work. This avoids spooking other participants and preserves the ecosystem. The plan is simple. Start with what is already owned, scale gradually towards 500,000 Bitcoin, allow the market to reprice, then at the right moment, make Bitcoin's role official. That shift would bring in global credibility. This has happened before. Gold was once the foundation, then fiat currency emerged. Now Bitcoin is taking its place in the system. Money evolves to solve problems. Barter gave way to gold. Gold gave way to paper. Fiat is now giving way to Bitcoin. None of the old assets disappeared. They all still matter. Bitcoin will take its place alongside them. The progression is already visible. Phase 1 is quiet accumulation. Phase 2 is front-running by institutions. Phase 3 is a leak or public acknowledgement. Phase 4 is official use of Bitcoin as collateral. Each step reinforces the next. As the price climbs, the market cap expands. At $100,000 per coin, Bitcoin is worth over $2 trillion. At 2 million, the market cap reaches 40 trillion. This is no longer about the price, it becomes a monetary foundation. Executive Order 13984 is already active. It formalized the strategic Bitcoin reserve in 2025. It consolidated the recovered coins. It gave legal authority for future accumulation. The legal framework exists. Now the market has to deliver the rest. If the Fed eventually holds 1.2 million Bitcoin, it may start as 10% of the balance sheet. As the balance sheet starts to grow again, Bitcoin's percentage will shrink. This is how strong assets behave. They become the layer that other assets build on. In 1934, gold was the entire balance sheet. By 1970, it had dropped to 13%. By 2025, it represents less than 1%. But its absolute value is still enormous. Bitcoin could follow the same pattern. If Bitcoin hits 1 million and the Fed still holds 1.2 million coins, the value of that reserve would be 1.2 trillion. Even if its percentage declines, its role becomes more important. This is how reserve assets evolve. They shrink in share because they become the foundation. Gold played this role in the last century, and Bitcoin is positioned to do it in this one. This is value migration. It does not require disruption. It requires timing, strategy, and trust in the signal. Let me know your thoughts. Thank you.